Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lana, your favorite dividend investing channel here on YouTube. We said it. Why? Because you're going to subscribe here. We're going to talk about not Realty Income, not Vici, not SPG, not AMT, not all of the REITs, guys. We're going to talk about something in particular that may help you in investing in REITs right now versus picking an individual REIT.
Let's go, everybody. But before we do, you got to subscribe to the channel. You got to give your boys a thumbs up. And wait a second, what's that? We get to not 100, not 200, not 300, but 400 likes on this video, and you subscribe and you leave a comment below, you're going to get some Dividend Diplomat swag. We're going to pick one person. It's a swag giveaway on this video right here, right now.
100. Let's hear it, guys. But let's talk here, guys. Let me talk to you, LA Knight style. REITs have been beaten down quite a bit here in 2023. Bert, what's one of the reasons why REITs are coming down?
Well, interest REITs have a lot of debt on their books. That's what they need. That's how they fund their property purchases. When interest rates rise, their interest expense climbs. Cash available to investors to pay out dividends and reacquire more properties is gone. So naturally, rates rise, REITs fall. It's that simple. Very, very simple.
It is that simple. And there's a certain popular REIT that's been beaten down over, 20% this year, 21%. Realty Income. Ticker symbol is O. Everybody loves the big monthly dividend income payer. We used to call it be a landlord without being a landlord with this real estate investment trust and Realty Income, or Bert, you've been gobbling up shares left and right, trying to get to a certain. You want how much per month? I think in
I want $50 per month of Realty Income. We're at 43, and in Q3 we added over $2,500 to our Realty Income position because we started buying at 60. It dropped all the way down to the 50, even in the high 40s. So that's the price that we love Realty Income right now.
Exactly. And then there's another popular one in the entertainment space. When you think of your casinos with Vici Properties, ticker symbol is VICI, and that REIT is down about 9% as well, respectively. But guys, we're here to tell you don't have to pick an individual REIT. But let us know what is your favorite REIT in the comment after you like and subscribe to enter the 400 like giveaway, guys. Because Bert, what other alternatives are there? So if the whole REIT index or industry is coming down, what is an alternative to picking one REIT to buy?
Exchange traded funds, ETFs. So I was trying to think of the analogy for this one. So if owning a REIT is like being a landlord without being a landlord, is owning a REIT ETF like being like the condo association that sits above all the REITs? Like you're just managing all the REITs there. So there are, all joking aside, there are ETFs that are REIT specific ETFs. And why is this beneficial for investors? Picking individual REITs and understanding their specific sectors and their specific balance sheet allocations and all the nuances that go into picking the right REITs can be very difficult. It can be very time consuming. So Vanguard and a lot of the other places offer REIT ETFs to take that burden away from you, to just start doing it for you. They pick the REITs, you invest in the REIT ETF, bada bing, bada boom.
Bada bang, bada boom, baby. So we're talking about Vanguard's Real Estate Investment Trust ETF. Ticker symbol is VNQ, guys. Make sure you write that down, especially for all you ETF investors out there and those looking to not pick individual stocks or ETFs. VNQ actually is it's a solid Vanguard REIT. For a few people that help out with their finances, they wanted to get exposure to the REIT space, and I always would recommend VNQ. Especially those that are in the income phase of their life. They have a 0.12% expense ratio. So it's still fairly low, I think, with being that niche of an ETF. Any feedback on that, Bert?
Very low. Because remember, there's take a lot of time, a lot of research that goes into REITs. Like it's not quite as simple. So even though 0.12 is above the 0.03 of some of the other Vanguard REITs, that's still exceptionally low. And that's way below a mutual fund. Way below a mutual fund. So ETFs offer some great value there.
The interesting part too is that with most REITs, especially that you've seen with the history with Vanguard's Real Estate Investment Trust ETF, they always do a capital gain distribution, typically in December. But we're not going to consider that when we evaluate the current yield of this ETF, Bert. I know O is yielding somewhere around 6%. There's a lot of REITs. AMT is probably around what, 3 to 4% right now, four
Most,
to five
yeah,
percent.
within the 4 to
Um,
5% range.
so this REIT in particular is at 4.24, 4.25%, not considering the capital gain distribution that might happen. If we were to consider that, you could probably add, another 30 to 40 basis points to that. So getting towards that 4.5 to 5% range of this REIT. But again, not going to consider that when we evaluate the metrics of this ETF itself.
Yeah, that's right. So let's talk about this because REITs like to publish some of their top 10 holdings too. That's a big thing. A lot of people focus on the top 10, what percentage it makes up from there. And Vanguard VNQ has a very interesting top 10 holdings, doesn't it?
Yes, they do. And guys, just to go back, 4.75% if you include the December capital gain distribution. And so the yield does go up by at least, almost 10% with that distribution.
And a
But
quick
yeah,
editor's note, I just checked AMT's yield is 3.88%. So I was a little aggressive when I said the up, but it's almost at 4%. So
exactly. How about that, brother? You might have been better off buying VNQ, but let's look at the top 10 holdings. As you said, Bert, what's crazy about the top 10 before we dive in is the top 10 holdings of VNQ makes up 47% of the ETF. And there's over 100 plus positions within this ETF as well.
in comparison, I'm just going off the cuff here. I believe VYM and SCHD are two favorite like high dividend ETFs. Their top 10, I think the SCHD has like a 40%, but I'm pretty sure VYM was in like the 20%, 25%
Yeah,
range.
pretty well. Yeah, right,
So
right,
we're not
right.
saying they're the same at all, but just for comparison, top 10s can vary based on the type of the fund. So it's important to look at.
Yeah. So they have 160 holdings. So 10 make up 47%. Bert, what are some of these holdings that VNQ has?
All right, well, let's look at that number one holding. That's 12.77% from there. Vanguard Real Estate Index Institutional Plus Fund, aka a money market account's the number one holding right there. Number two, Prologus. I think I'm gonna botch these pronunciations.
Yeah, Bert, you meant mutual fund holding.
Oh, did I
Yeah,
say
yeah, you
mutual
said
fund?
money. Yeah, you said
Yeah, I'm
money
sorry.
market.
Mutual fund. Yeah. Whoops. All right. I am all over the place in my editor notes today. Prologus number two, American Towers number three with 5.59%.
Wow.
Equinix is 4.9% from there. Public storage, ticker symbol PSA, 3%. So the percentages are starting to really fall off here. Crown Castle, CCI is 2.91%. Well Towers, 2.86%, ticker symbol Well. Love that. Simon Property Group, ticker symbol SPG. The Malt, 2.5%. Realty Income, one of my favorites, is 2.45%. And Digital Realty Trust, ticker symbol DLR, 2.44%.
Yeah, you gotta really like that, guys.
Yeah.
Yeah, thanks for rifling that off. So taking out the mutual fund, there's 9 individual stocks that make the top 10. And out of the nine, Bert and I, we went through them. 6 out of the 9 at least have a very good dividend growth streak. Prologis has, 9 years. Equinix has 6 plus years. DLR, 17 plus years. Obviously the big O, 26, 27 plus years. AMT at 8 plus years. CCI at 8 plus years as well. So just dividend growth is really built within this ETF in the top 10 here, guys. But what's interesting here, the last dividend growth that we have seen year over year using the last 4 quarters versus the previous 4 quarters, dividend growth was about 15%. But it's hard to, get as much data on this REIT because I've always wanted to split out the return on capital or the capital gain distribution at the end. And keep in mind, Bert, how is this REIT taxed compared, or this ETF taxed versus other ETFs or stocks?
Yeah. So that's a very important point there too. It's taxed at ordinary income versus being qualified dividend. So always keep in mind tax consequences of holding REITs in a taxable account. That's why I know some people prefer holding REITs in a Roth where the taxes don't matter, tax free. So very important point to keep in mind. Remember, These are taxed at ordinary income rates, not qualified dividend rates.
And bro, I don't know about this, but we'll flash the stock screening metrics maybe on the screen because again, you can't really get funds from operations right now on the ETF. Um, and they really show the price to earnings ratio on Vanguard's screen of about 29. The payout ratio, because it's based on earnings right now, is over 100%, but really REITs focused on the funds from operations, so it's pretty difficult to gauge right now.
Yeah, it's worth putting up, but it's not worth highlighting it too much more. Let's go to that bonus metric because that's probably the one here that we can
Yeah.
really control. You already touched on dividend growth. What is the dividend yield? Because that's what I'm sure these REIT investors want to hear. It's all about the yield.
Yeah, so Bert and I, we were saying it's about 4.24, 4.25% right now. Higher than some of the holdings, lower than obviously Vici, and a few others that you guys like to buy out there. But Bert, how does this compare? Well, you got to think too, with the capital gains, it would be about 4.75. But how does this compare to that 5-year average yield on this ETF?
Higher. The 5-year average yield is 3.76%. So it's a potential sign of undervaluation right there. When the stock price falls, yield climbs, it's higher than that 5-year average.
All right, guys. So this ETF, this REIT ETF is down almost 8.5% this year alone, down about 4.5% since last year. What's wild though, and back, like 10 years, really they're only up 11% over a 10-year time frame within this ETF. So obviously not a great performing from a price appreciation standpoint. If you were to buy this, like what would be maybe your reason for to buy, VNQ?
Well, I think it's you want to REIT, but you don't necessarily know how to analyze REITs. You're not an expert in the REIT specific niche, so that's why you do it. You get slightly higher income compared to equities. You want to diversify out of stocks. You want to get some REITs, and this allows you to get a nice yield of 4.25%, solid dividend growth, which you already highlighted here, while allowing the experts to pick the specific REIT. I think that's in my mind's the benefit. Do you have any other reasons why, Lanny? Something that I've been
Yeah,
didn't.
I think it's just, hey, you want a nice income, from an ETF that gets you exposure outside of, the nuts and bolts of the stock market.
Yeah. They're
You
tricky
know,
though. Like, oh, after you, I hold on.
I was gonna say, VNQ actually is down about 3.37% over the last 5 years. So VNQ down 3.37%. Realty Income in the last 5 years is down 10.7%. So Realty Income is down 3 times as much from a price standpoint over a 5-year time period. So
Yeah,
just to keep that in mind.
yeah. Diversify away their exposure to REITs while still being able to invest in REITs. That's a huge reason why you would consider VNQ. But I guess the question here is, what does everybody else think of VNQ? Like, we're giving our thoughts. They have some great investments, that top 10, 47%, but they're very high quality REITs buried within that top 10. What do you think? Share those thoughts down there below in the comment section.
Yeah, guys, let us know if you own VNQ, the Vanguard Real Estate Investment Trust ETF. Let us know what other ETFs you think are better in the REIT space. We would love to know that. Are you buying REITs right now? Have you been buying O stock, Vici stock, or just any old REIT ETF? Let us know in those comments, please.
If you haven't already, subscribe to the channel, give this video a thumbs up, and remember the subscription is important and so you can enter that contest when this video gets over 400 likes.
Yeah, guys, like, comment, subscribe, please, so we can get you some of that DD swag. You know, drinking from the DD mug this morning, guys, ready to get after it. That's what we do. That's what the diplomats do, guys. And just remember, keep saving, keep investing, reach financial freedom, Bert. And is there one thing I have to still tell the community right now?
There is, but I think you're the one that has to do the honors here.
And I'll take it from here, Bert. If you're not with us, then you're against us. Jack, that was Bert and Lanny from the DD over and out.